This is Chris Vogt. I'm the president of the Realtors Commercial Alliance of Orange County. Joining us today is Steve Haddadin, attorney at law, and we will be talking about the One Big Beautiful Bill. There's a lot of stuff in there that's going to impact on commercial real estate. So we're very excited to talk about that. But before we begin, we're going to give you a quick introduction to the Realtors Commercial Alliance of Orange County. So we are the only commercial real estate association in the state of California and one of less than 30 commercial associations in all of the National Association of Realtors. So we're very excited to join you and to serve you here in California. So our mission statement, as the only commercial association of realtors in California, we empower our members to thrive in commercial real estate through education, networking, and fostering collaboration among commercial, residential real estate professionals and business brokers. And we'll be talking about some things that are specifically intended for business brokerage during this meeting too. So that's very exciting. So we do want to acknowledge our board of directors and council. So I'm the president both this year and next year. Helen Jong is our secretary treasurer. Matt Cortez is our director at large. And just in this past week, we have appointed Steve Haddadin, our guest today, as our general counsel. So he is our corporate attorney. And I also am the interim association executive. So I do the administrative work for the association also. So why would you want to be part of our association? Well, for one thing, we've got great education. I need to add that to our slide. Next week, on the 15th of October, for those of you watching after the 15th, we do this every month. We have a commercial real estate mingle where we get together and we share what real estate projects we're working on. So if you have a real estate project and you want to be part of our mingle, so you can share it with other commercial brokers, that's a great place to come. We are working on some social events. So we are planning to do a networking in place, in real life in Southern California sometime early next year. And we also have a member hotline. So our members can call in if they're working on something and get in touch with us. Actually, we don't ask you to call, we ask you to text because this is a number that doesn't ring on anyone's phone. So if you want to call, you can leave a voicemail. If you want to text, then the text goes to our Google Voice number and we check that periodically. And of course, if you're interested in learning more about the RCOC, you can visit our website. So coming events, this coming Wednesday, October 15th, we are doing our monthly mingle. And you can call it a pitch fest too, if you'd like, because we talk about what projects we're working on as real estate brokers. If you are working on a project and you want to find some people to partner with, let's say you have a listing that you want to promote. That's a great place to do it. If you have a client that's looking for real estate, that's a great place to do it. So if you are a business broker and then you have a business that you are promoting, there's a great place to do that also. So we have our monthly mingles, and we are in communication right now with the California Association of Realtors because we are going to do a commercial real estate update. What is the state of the market here in California and also nationally? And so we did this about 6 months ago with the Deputy Director of CAR, California Association of Realtors, Oscar Way, and we've also had Jordan Levine join us in the past. So I'm not sure who is going to be joining us from this California Association of Realtors in this coming one, but we're looking at dates in December and January to schedule that. So be sure and stay tuned, watch your calendar, and I'll drop the link if you haven't registered for this webinar. Then please pop over into our link and you can register to be on our mailing list. So we really appreciate that. All right. So we do have a sponsor for the Realtors Commercial Alliance of Orange County, and that is Menace Property Management. So if you are looking for a great commercial property manager, please give Blair a call and 949 409 5337. So that is the slides that we needed to pop out of the way today. And now it's time for us to start talking about the One Big Beautiful Bill Act and how it impacts on commercial real estate. So we're very excited about this. And Steve, welcome to the Realtors Commercial Alliance, both as our general counsel and as our special guest speaker today.
Excellent. Great to be here, Chris. Okay. So this One Big Beautiful Bill Act is very impactful on our industry as a whole. And when I hear the word big beautiful bill, I often, and I mean this rhetorically, I just think of like, I'm ordering a nice steak dinner or I'm ordering a fancy meal and I get the check and it's this big beautiful bill. It's going to be a large bill at the end of the night. But this bill is pretty large and it's got about 1,200 pages, a lot to it, a lot of updates. But let me focus on what it's going to do to our industry specifically and how you can grow your business doing it and what you should be speaking to your clients about. Because, as also being a real estate broker, I know that this business is about presenting information to people. And when you do it right, you grow your business. So, what is going to keep you ahead of other people in the game is having the right information. And today we're going to be discussing about the information you need to be talking about because this bill is going to stimulate commercial real estate. It already is, but it's going to stimulate it a lot in the next year. And I'm going to start off by going into the opportunities, going into some basic tax updates, drastic ones, and then talk about some estate planning. Okay. So, yeah, there's provisions that you need to be aware of. First, I'm going to start with something really basic, and that's the standard deduction. So the standard deduction, it's increased a decent amount for the upcoming year. And this applies to everybody, whether you're a client or the broker yourself or anybody really. So just to be aware that we're seeing this benefit come up and it's going to be great for everybody as a whole. Now, the provision that applies to your clients, maybe yourself, if you own property, is depreciation. So under the Tax and Jobs Cuts Act, it phased out. It was going to phase out in 2027. You had 40% left this year. You have 20% for next year. But now you have 100% bonus depreciation coming back, and it's permanent. Now, I don't really like the word permanent in Washington, D.C. because somebody can change it later on. But as of right now, this is a great time for investing, for estate planning, for all kinds of stuff in commercial property. So this is the time to make moves, take advantage of things. So where we stand with this new bill is you have two aspects of what qualifies under this permanent depreciation. That's the non-residential tangible property and qualified improvement property. Okay, and you get this when you buy a property after January 19th of this year. So right now, you buy a property, you get this 100% bonus depreciation if it's under the qualified property. This is something that you need to be telling your clients when you're talking about properties, when you're looking at their portfolio, when you're advising them. Because at the end of the day, your role, you're really like an advisor, but your job is to present information. So this is one of the things you need to be telling your clients. Okay. The other thing, you've got qualified production property. Qualified production property is really about in manufacturing, production, and refining of tangible personal property. Okay, so people that are manufacturing things, they get this benefit. And same time frame, January 19th, 2025. must be placed in service before 2033, and construction must, occur before January 1st, 2029. So that's the overall area in qualified production property that you need to be looking at. I would obviously imagine this being for the industrial brokers to be having this conversation with their clients that are manufacturing. I have I have a light industrial listing for sale or for lease right now. And some of my conversations entail this with prospects. Now, on the depreciation topic, and this is very big for the upcoming year. The phase out for Section 179 depreciation. That is found on IRS Form 4562 on your tax return. And if you notice, in 2024, the maximum deduction for the year was $1.22 million. And the phase out was at $3,050,000. You're getting a decent bump to 2.5 million and a 4 million max threshold. So now what I've seen with my clients in the past that have a substantial amount of property is they'll have a lot of depreciation and it's suspended and carried forward to many years in the future. Now you're going to see some of that benefit happen now. Obviously, other considerations such as if their net operating loss is pretty big, then that'll obviously be suspended. But if they still have income to use this against, this will apply and they'll be able to use more in 2025. Another great thing that happened with this bill is about business interest. So a little walk through on how business interest qualifies as a deduction for your clients. So basically, there's an ATI calculation and goes like this: 30% of your earnings before interest and taxes is what would qualify. So depreciation and amortization doesn't count. Now they bring that in, so that maximizes what you can deduct. And that's a big deal because especially with the rising interest rates, a lot of that oftentimes you were suspended or you couldn't use it. So now you have this expansion in the deduction, and that's a good thing. It makes things move more in our industry. Capital is a consideration. Access to capital is a consideration. And with higher interest rates and then this limitation, it made things a little bit difficult or a little bit unpleasant in the industry. And now this is a breath of fresh air for your clients. And if you're buying commercial real estate yourself, this is great for you. Another part of the bill I want to get into is about opportunity zones. Now, keep in mind, this current map is where we are right now with opportunity zones, which will be redesigned in 2026. This is one I got directly from the NAR, and this shows you all 50 states and territory right there. And it shows you how prevalent it is in our country. Some areas more than others, but there's a lot of opportunity. And I'll go over what's been changed with the One Big Beautiful Bill Act and what you can take to your clients. But overall, in summary, rural areas are getting the most benefit, and rural areas is basically the target to grow. They want to grow those areas. So in order to stimulate that kind of an investment, this was made a part of the bill. So it incentivizes you, the investors, to make investments in those areas. And basically, what happened is they changed what's called the improvement test to qualify you. And they also increased the basis step up for specifically rural. Okay, so the way this works is, say you buy $1 million property The land, let's say, is $400,000 and 600,000 is the improvements. Well, you needed to have invested another 600,000 to improve that property to qualify, because 600,000 is the building portion, and that's where the 100% improvement test applied previously. Well, now that's 50%, so it makes it more accessible, makes it more available for people who maybe don't have that much of an investment to make, or wouldn't qualify to get financing for it, or other considerations that let them out of that market for opportunity zones. Now it's 50%. The other thing is the basis step up is 30%, which was 10%. And you got that within your first 5 years. Okay. And that's a partial exclusion. The way this works in three phases. There's 5 years, 10-year period, and a 30-year period. So after the 5 years, because the first 5 years is not a full forgiveness. Okay. The remaining after the 30%, that's subject. Okay. At 10 years, you can sell the qualified opportunity fund investment tax-free on any appreciation after what you invested. And in 30 years, you get a step up in basis to the full market value. So this is a big deal for a long-term hold. And even for a short-term hold, this is great. But long-term, you get a lot of benefits from having this opportunity zone investment. And with enough people getting into these areas, you're going to see a good return on your investment, anticipated. And I'm going to go into that in a little bit from some conversations I've heard at the conference I was, the CCIM conference in Vancouver. I had the opportunity to hear from policy director NAR and some marketing and data analysts from the Altus group. So the other thing I'm going to get into another tax consideration is the SALT tax. So for those of you that don't know what SALT is, it's a state and local taxes. And this is very important for states like California and New York and states with high taxes on the state level, or high property taxes. Even some states have higher property taxes. So this is key to note that it is increased from 10,000 to 40,000 in terms of what's deductible in your tax return. And in California, some people, their property tax on their personal residence alone is $40,000. They're already out of that. So what this discussion ties into is something that I myself can do in my firm, or an attorney that does this kind of work can do. And it's called a non-grantor tax or trust, where what you can do with that trust is you can set it up to where that trust itself has its own SALT, and you have yours as well on your side. So you maximize it, you increase it. Instead of just having a one-time $40,000, you have it in that trust and yours. So now you'd have say your state income taxes in the state of California is 40,000. Now you're locked out. And then your residence, so your residence will be in that trust, and you would have your personal income tax in California, and you'll be good. We're employing these strategies for certain clients. So just FYI, this is a strategy being used with the SALT tax, and important to note, especially in our state where there's a lot of taxes, and you may not be seeing those benefits when you do your tax returns. You're spending that money, paying it, and you don't get to deduct it, and it's unfortunate. So now with this increase and that strategy, you maximize your benefits. Okay. Another good thing we're working with is with the qualified small business stock. We're doing this with C corporations, and I'll walk you through what has changed. So with C corporations, pre One Big Beautiful Bill Act, you had a $10 million gain on the stock, tax free. Well, now it's increased to 15 million. And valuation wise, in terms of the C corporation, what qualified you as a small business was 50 million before. Now it's 75 million. So now that opens it up to a lot of those that are higher net worth, that want to find more tax strategies. This is one thing that we work with. through C corporations and planning. And the way it works in three different phases and how you hold the stock. You got the 3 year, the 4 year, and the 5 years. So basically, within 3 years, 50% qualifies, and then 75 in year four, and then you get the 100% after 5 years of holding. So bottom line, a lot of the stuff in this bill, it's a long-term strategy. And real estate in general, it's a long-term hold. So when you're talking to your clients, this is another conversation to have, is talk about when you do your projections and everything, kind of show them how you can employ all these strategies. And this is a part of the conversation you'd be having with this. And as you can see, when you look at these different benefits that this bill is giving you, it really will stimulate our commercial real estate. So with that being said, this is what you should be doing with your business to grow your business, and the conversations that you need to be having with your clients as of right now. So basically, I showed you a summary, a snippet of what the depreciation benefits are as of right now. So you could take that or get more details from the bill itself and kind of sit down and show your clients, hey, we're looking to buy more commercial real estate. This is how we can make even more sense with the numbers. This is how we can benefit you more longer term. And partner with a cost segregation company, because those folks have reports, sample reports that they can show you. You can take those numbers and show real numbers to your clients. And when you make the investment, obviously, and you use those cost segregation companies, that's when your client will have real numbers to use, and you have a more accurate calculation. But overall, that's how you're going to take those benefits. When you have a cost segregation study done on the property, you utilize the new law. And the other thing is to research which opportunity zones are going to be available. Because again, as I said, it's going to be redesigned. So for you to really know what is available and what you can get into, you got to look in that as it comes out in the coming year, and get started with that. And the other thing I'm going to mention is the estate plan, which I'm going to bring up next after this. But having a good estate planning attorney on your side is very important in this. And I'm going to walk you through what the bill has done in terms of estate planning. And I'm sure most of your clients who own commercial property, I'm sure they have estate planning considerations to make with their portfolio. And right now, we're in a very, very favorable time for estate planning. And as I said before, the word permanent, I don't really like that word being used in Washington, D.C., because I know when something, especially something politicized like taxes and estate planning, that can change with the next administration. That can change after the midterm election. I don't know. I can't predict what they're going to do, but for where we are right now, estate planning is a very favorable time, and we've never seen such favorable numbers being used. It's a great time to do it. I'm gonna get to that next. So review with an estate planning professional. Okay. Now back to what I was talking about with where things look right now, because the bill was passed about 3 months ago. So where are we after 3 months? And we have data on this. So the Altus Group says as of right now, in the first 3 months, it's going to be hard for them to have real data on how investment returns are looking or what the numbers are. But what they are seeing is they're already seeing more investment than last year, which is indicative that this is the time to make moves. And in order for you to be a part of those moves being made, you gotta use this information to your advantage. And then the NAR Commercial and Policy Oversight Director stated that rural area investment is going up. And I, based on what the law says, I would imagine so. So yeah, that's kind of where the discussion goes. And I'm gonna shift gears now to estate planning. And So with estate planning, what's happened was we had a sunset due at the end of the year, a sunset of the Tax Cuts and Jobs Act, where as we currently stand, the exemption is 13.99 million, right? And that was to phase out to $7 million starting 2026. Well, now with the One Big Beautiful Bill Act, it was raised to $15 million and it's permanent. Again, as I said, I don't like the word permanent being used, but as of right now, we don't have any concerns of a sunset. And it's a very favorable environment to plan your taxable estate. So that's the first, that's overly broad. That's the first part of the bill that you got to be aware of is the exemption. Now, we have several strategies. At my firm, we have several strategies that we employ. I'm gonna walk you guys through that a little bit, uh, and Chris is gonna put a link in the description because by attending this, by watching this, you qualify for a 30-minute free consultation with me about estate planning or about some real estate law or anything that you may need in regarding to this presentation. And that will be good on the description for within the next week. So if you want to get that, act fast and can schedule something and discuss this and see how I can help you or your clients or whatnot. So, but basically, one of the ways we do things is we have something called upstream planning and lateral planning. And there's three reasons why we do this. So one is, let's just say you have a very low basis on your asset and you have a parent or a grandparent who has lower income and hasn't really used their exclusions and they have a shorter life expectancy than you. So you set up a plan where you gift up the asset to them, the older generation, and then later on they pass back down to you at with the step up in basis to where you get it at fair market value. So you basically save all this capital gains tax if you want to go to sell it during your life or okay. The other thing for lateral planning is we do it through siblings, cousins, any other family. We set it up where you basically send that over to them and you shift ownership, diversify ownership, shift income, go over what your goals are, and we decide which strategy is best for you. That's one of them. Okay. Other things we do is we have estate freezing strategies. Okay, so we have stuff we use, for example, an intentionally defective grantor trust. And that's where we you sell your assets or gift it to your grantor trust. So any growth from there on, henceforth will escape the estate tax. We also have a grantor retained annuity trust where basically you retain an annuity stream that shifts post-term appreciation to your heirs tax-free. It's another strategy we use. We also use spousal lifetime access trusts, family limited partnerships. We use some LLCs where what we do is we get an appraisal done on your assets and we get them discounted through different strategies we use to get the discounted valuation. And so that way we can keep you within the exclusion amount and not surpass it. And we can make a plan with what you have as of right now. We also have installment freezes we use. You have note sales, and everybody's situation is different. Okay, and we use ILITs also for life insurance because also, believe it or not, life insurance is will eat some of that up, that exclusion, and a lot of people don't plan for that. So part of the planning. And right now, where we stand, the current exclusion, it's a very favorable time for you to make a plan. And other than that, I am more than happy to discuss estate planning or real estate law with either any of you on a Zoom. Chris, I believe, has added the link to uh, the description, or where have you added it, Chris?
Yeah, I added the link to the video under the description. So we'll leave that in there for about a week and then we'll remove it. And we did get one question, which was, is it possible to get a copy of the PowerPoint presentation that you're doing?
So basically, I believe this is going to be posted on YouTube, so you could just rewatch it.
Okay,
Yeah.
great. And another question is, are the new limits that are included in the one big beautiful bill, are those indexed for inflation in the future? Do you know if they are or
Yes.
not?
Yes.
Okay, that's especially important for estate tax planning, correct?
Yeah.
Excellent. Okay, so those were the questions that I've seen so far. If you have a question and you'd like to ask, then please do let us know what those questions are. We'll stick around for a couple more minutes. Are you done with your slides? I don't
I,
remember
I
if you
I
did the
am
last
done
slide.
right now. This is pretty much where I'm at. Yeah. So
Okay,
I can
great.
stick around for another minute or so, and then obviously you already put the link, so fill it out, put in the comment RCAOC where you want to describe additional comments or whatnot, so that way
Yeah,
I
and
can
I'll put a
email you.
link in the description too, so if people have questions, they can email us um, and get back through the RCAOC, and we'll get back to them, either introducing them directly to you with your information or answering the questions directly with them.
Excellent.
So one of the things that I'd like to talk about for just a moment is the small business qualified stock, because that I see is a very, very important issue that very few people actually know about. I was at a business brokerage conference maybe about 3 years ago, where a lot of business brokers and people who are buying and selling businesses were in attendance. And I was really quite surprised because the one of the presenters, actually a lawyer and a CPA, I believe he had both of those titles, he was talking about this very thing. And I wasn't aware of it at that point. And he asked the audience, how many people in the audience were aware of the small business qualified stock sale exclusion? And there was only, out of a crowd of about 120 or so, there were like three people in the entire room that knew about it. And no one really knew much about how to do it or anything. And I think this is a huge, huge planning opportunity for our clients and for ourselves, so that we have an exit plan for our own business and that our clients have an exit plan to be able to cash in tax free and then reinvest those proceeds into other real estate projects as passive investors, maybe buying a triple net property or something like that. So this is a great opportunity for both commercial real estate brokers and our clients to have a better understanding of how to take advantage of tax law to create more wealth for ourselves. So there are some very, very specific things that you have to do to make sure that you qualify for this exclusion. And it's very important that you have a good understanding of that. Steve, do you have any
Yeah.
comments on that?
No, just absolutely. And yeah, just waiting to see if anybody else has any questions. And other than that, yeah, no, this is pretty much where we want to shift everybody's conversations with their clients about in terms of what benefits they have in investing more, aka also growing your sales volume the next year, and what they need to be concerned about long term, because everything is about long term planning, So you got to plan what you're going to do with the property, if you're going to have an exit strategy and whatnot, and you also need a plan for when we're all going to die one day, and where is it going to go? Statistically speaking, statistics show that 70% of family wealth is eroded within the first generation, which is a problem. And there's a lot of wealth to be inherited very soon, So where are we going to go with that wealth? I think you're muted.
Yes, I did mute myself because I pulled up the live stream on my computer so I could see if there were any additional comments or anything. And the only comments I see is people are very appreciative of the information. So I did get some text messages and some emails during the presentation, which is where the other questions came from. So, all right. Well, I really appreciate you coming today, Steve. And so thank you very much for doing that. Go ahead and stop your presentation or your share. And anyhow, we really appreciate you coming today. We appreciate the information. We welcome you as part of our leadership team here at the RCAOC. And if everyone's doing great, we're super appreciative of that, and we're looking forward to serving you and seeing you at more RCAOC events. Remember, next week we are going to be doing an event. I will be putting a link with the YouTube video coming up here shortly after we finish, so that anyone who is not a member or on the RCAOC email list, that you can join our email list so we can keep you informed and involved as we have future activities. So with that, thank you everyone for joining us today, and we look forward to seeing you again in the future. And that's it. Take care.